Good morning, everyone. I hope you're all safe. My name is Nic Andrew, and welcome to the Nedgroup Investments Insights at 10 series. I am conscious that we are at home, so the signal might not be perfect, but please bear with us and we'll try and make a plan. We have spent the past month interviewing our best of breed fund managers from around the country and the globe, hearing their insights and how they are positioning their portfolios. If you missed any of these and would like to hear about them, please contact the Nedgroup Investments team, or they are available on our podcast channel. Today, I'm delighted to have the opportunity to engage with Mike Brown, Chief Executive of Nedbank, to hear his views and insights in these extraordinary times. Mike, welcome and thank you for joining us in what I know is a very hectic schedule.
Great, Nick. Thanks. It's good to be with you, and thanks everybody for taking time out to join us.
If we just start from a Nedbank perspective, Mike, I know that you have managed the bank through a range of crises, such as the 2008 global financial crisis. You were very involved in Nenegate and managing the bank at that stage, but none of us have experienced anything like this. As a leader of one of South Africa's leading corporates, what have you tried to focus on getting right over the past couple of months?
Thanks, Nick. I suppose what I try and focus on is, in the first instance, getting the right balance between big picture things, either for Nedbank or for our industry or for our country, detail and communication. Big picture, detail and communication. And at the same time, making sure that we are providing a sense of direction and purpose in difficult times to both our clients, our staff, and communities through extensive communication. And really, if I think about what I'm trying to get through in that communication, in the first instance, it is about direction. So initially, in a crisis like this, it's all about business continuity planning. So, we'd set up pandemic steercos to oversee the actual detail of what we needed to do, but there's lots of detail around, what we can do as an essential service, who works from where, what permits do people need, what resources do we need, what health precautions do we need to take, who in the bank is infected, who's quarantining. So there's a huge amount in the beginning of providing short-term direction around how we continue to operate in this crisis environment. And then directionally, what I'm trying to do is get everybody's minds and thoughts organized around three key themes. In the short term, it's more around resilience. So you've got to get that right. So in a financial services business, it's around your trading positions, your liquidity, your credit, your capital. So in the short term, it's around resilience. And then in the medium term, there'll be a phase of transition. So, how do we transition from where we are now to a more normalized environment? When is that likely to happen? How do we think we're going to transition through levels? And already we've gone from level 5 to level 4. And then, thereafter, not losing sight of the longer term future. So the reimagine phase, what is life going to look like after this? Who are going to be winners and losers? So the first key theme is around trying to provide direction. The second key theme for me is to ensure that we can give our people and staff purpose. And Nedbank has a purpose statement, which is to use our financial expertise to do good. So we're using this environment to very strongly orientate our staff that this is an opportunity to deliver on Nedbank's purpose as in supporting our clients and supporting communities in these difficult times. And then the third big picture thing would be stakeholder engagement and communication, which is absolutely vital in these times. So, as COVID was arriving, we were just finishing our year-end investor roadshows. I think we'd done somewhere between 70 and 80 of those. We, about 2 weeks ago, set up a specific webinar on our response to COVID-19. And on Friday last week and Monday this week, our chairman, lead independent director, and chair of our risk and credit committees continued with our annual governance roadshows, talking to shareholders about all of the governance issues and the resolutions we're proposing at our AGM. So there's a huge amount of stakeholder and shareholder communication, communicating with our boards, communicating with our regulators. And then I think very, very importantly, communicating to staff. We have, weekly staff communications that go out, and more regular communication lower down in the organization, but certainly weekly from the chief executive. And we've sent literally hundreds of thousands of communications to our clients. So Nick, I hope that's helpful in providing a framework of what I'm certainly trying to get right.
Yeah, no, that's great. Thanks. And Mike, as a sort of key financial institution in the country, and I think you touched on it at the end, speaking around how you're communicating to clients, but what has Nedbank's specifically been doing to help clients other than just communicating? So what have been some of the specific actions?
Yeah, so this is obviously an environment where many clients in good standing, many years of history with the bank, their financial position has been impacted through absolutely no fault of their own. So, there is a massive focus across our business of helping these clients manage through this period. And it's not always easy for us to deliver on that because, we've got probably 80% of our staff working remotely. We've got, less than full capacity in all of our call centers, given the social distancing we have to put in place. But, broadly speaking, if you look at our retail business banking and CIB businesses, we've had extensive campaigns to customers reaching out to help them restructure their cash flows across all product sets. And, right now we've probably helped more than 200,000 clients in that sort of environment. We've provided education to clients on how, for example, their credit life products work, particularly in the unsecured lending environment, and how those can be helpful. You'll know in your world, you've continued to reach out to your clients with investment advice in extremely volatile markets. And then we've been, I think, very actively engaged with the likes of the SA Future Trust, which is the Oppenheimer initiative for SMEs. And I might have the numbers slightly wrong, but I think right now, I know that fund is fully dispersed, but I think Nedbank has dispersed around about 250 million of that to just under 2,000 clients across our universe. And then, for the last couple of weeks, been extremely actively involved with National Treasury and the SARB in the design of the 200 billion rand SME scheme, the first 100 billion of which was publicly announced yesterday. So I hope that gives you a lens of what we're doing across our client base.
Yeah, thanks. And if we shift a bit just to the banking industry and maybe just sort of industry leadership, business leadership, the banks fulfill such a pivotal role in the economy. I know you currently are chair of BASA and vice chair of Business Leadership South Africa. So how is the banking industry working with other industries, with regulators and the government to try to get the economy going and deal with the crisis?
So if I just started with the Banking Association board, since pretty much the middle of March, we've had weekly board meetings of BASA. Usually the BASA board meets, I think, maybe 4 or 5 times a year. So we've probably met more in the last few weeks than we usually do in a full year. And what we've been focused on is trying to stay ahead of the curve on emerging issues for both the economy and for our industry. So just to give you some sense, so very early on, probably middle of March, back end of March, somewhere there, we put together a very big piece of work around all the potential legislative changes that could be considered from a macroprudential point of view to help support the economy and clients. And that work was sent to both National Treasury and the Reserve Bank. They're obviously doing their own work, but they'd have taken our thoughts into account. So some of the things that you've seen announced, like changes in repo mechanisms, the release of something like Directive 3 around restructured accounts, the capital relief across the banking system, and liquidity coverage ratio changes. So we were trying to make sure we were at the front end of ensuring that all of those were appropriate to support the economy. Obviously the BASA board has had oversight of the SME work. And then we have a weekly meeting of National Treasury, the SARB, the FISCA, and the BASA board executives to try and stay up to date on a weekly basis with what we see happening and what we think appropriate interventions should be. If I shift a little bit from BASA to Business Leadership South Africa, so Business Leadership South Africa is the aggregation of all of the top corporates in South Africa, and that feeds into the apex business body in South Africa, which is called BUSA, or Business Unity South Africa. And what BUSA did very early on was set up a platform that they have branded Business for South Africa, and that has become the de facto platform through which all business engages with government on COVID-19 related matters. So we've been very active in commenting into that platform on all emerging regulations. So for example, when we shifted from, level 5 to level 4, extensive communication went in very short notice over, I think, a day or a day and a half around all of that. And, it does give us the opportunity to give input into what we think needs to change, what's working and what's not working.
Thanks. And Mike, you mentioned that you've been speaking to shareholders as one key stakeholder. Just from your perspective, globally and in South Africa, how are the banks positioned to manage the current crisis, both from an absolute perspective and relative to prior crises such as 2008?
Yeah, so certainly the banks globally and here in South Africa are in much better shape than prior crises. If you take the global financial crisis, for example, I always remind people that, the banking system, I think, went into the global financial crisis with capital levels, set one or shareholder funds levels of somewhere around about 8%. And that was enough to get the South African banks through the global financial crisis. Today, we go into this environment with capital levels probably 40% higher than that, and a lot less exuberance in asset growth in the build-up to this. But that being said, no one knows exactly what the shape and depth of this crisis is going to be. But I guess it is self-evident that in the global financial crisis, it was a financial crisis that then hit the real economy. So the banks were at the epicenter of it. Now banks are more impacted by the economic outcomes of this crisis and are more part of the solution in helping clients to manage their way through this. I think the other thing that's always really important to note in the South African context, we point this out a lot internationally, all the domestics understand this, but exchange control, we always say, has a lot of negatives, but one of the big positives of exchange control is it means that the total Rand funding pool in South Africa across the banking system is stable, because that pool is controlled through effectively exchange control. So, every single financial crisis that I've seen, go back to 2001 and 2, 2008 and 9, Nenegate, etc., we've seen the overall funding pool in South Africa across the banking system remain stable. Clearly, there are pockets in the financial services environment where you see pressure ebbing and flowing at various stages in a crisis, but the overall pool remains stable, and the Reserve Bank, through the repo mechanism, is able to ensure that that pool is distributed into the financial system.
Thanks. And if we look now at the current SA lockdown and policy, it'd be just interesting to get your current view on how long the lockdown in South Africa, how long you think it will last, how you feel the economy will open up, and how long, which I guess is the million-dollar question, before we get back to normal.
Well, if I knew the answer to that, I'd be a lot smarter than I currently am. I think in its essence, we all know that a lockdown is not there to stop the virus in total. All a lockdown is designed to do is to spread the emergence of the virus over time and give health systems more time to be able to get their act together, to be able to cope with the inevitable increase in infections. So, right now, if I remember correctly, I think the base case that we've used in some of our economic forecasts out of our economic unit was that, after I think 35 days or something at level 5, we're likely to have around about 30 days at level 4, 60 days at level 3, and then, you probably only get to level 2 sometime in August and September. Now, that's got lots of forecast risk in it, and I'm sure if you asked me next week, I'd probably change that. But it's also complex because as this is emerging, it does now look like we might at some stage get to different levels by region. And certainly there's also a lot of feedback going in to try to change how we think about what can be done under each level relative to what is currently allowed.
And my next question is, what would your advice be to President Ramaphosa in terms of opening up the economy and really balancing the hugely complex health and economic issues?
Yeah, so you're quite right. It is an incredibly difficult balancing act between, the impact of the virus on health and mortality and the impact of the virus on the economy, health, society, and mortality. But, I think for me, the key is how we can safely accelerate through these levels. If I had to give advice, and certainly this has been some of the input we've been trying to share through the Business for South Africa platform, in the first instance, I would advocate re-looking at the approach to levels. It just doesn't seem that an approach that is so rigid by sector, by product, by sub-product in some instances can be successful because it ignores the interlinkages in an economy. It would be almost impossible to administer, and in many ways incredibly difficult for anybody to understand. So, a week ago, for example, there was legislation around the ability for motor vehicle manufacturers to begin to start some form of manufacturing, but there was no legislation around any vehicle retail sales being able to take place. So you just don't get the flow through in any form of economy. And I think last night I saw something around vehicle sales, but again, incredibly complex. So I would be advocating trying to do this completely the other way around, where effectively all businesses that can adhere to appropriate health, social distancing, and safety standards should be allowed to open. Other than, and then you can have a much shorter list of what is not allowed in each level, as opposed to this approach of having pages and pages and pages of what is allowed. So I think that would be certainly the first thing that I know many people are advocating for. And I think the second one would come back to communication. We haven't heard from the president now for, I think, 18 or 19 days. And I think this is an environment where the president needs to communicate to all of us on a weekly basis to give us hope about what the future is likely to look like.
If we then shift a bit, and one of the things that our clients, and we've been engaging a lot with both our fund managers and our clients, is what are some of the longer term consequences? We've seen globally and in South Africa a massive economic impact and a government response that's been unprecedented. What do you see as some of the longer term consequences of the current crisis in terms of whether it be growth, whether it be inflation, taxes, politics, etc.?
Thanks, Nick. So, looking at the longer term consequences, and again with the caveat that actually nobody really knows, and that in this environment with so much complexity, pretty much all forecasts are wrong. You're just not sure by how much. But generally, if you think about growth as your first vector, there's lots of debate internationally and domestically that sort of seems to have shifted to, is this likely to be a V-shaped, a U-shaped, or an L-shaped recovery globally or in South Africa? And I think, if you think about where that looks like right now, I think, V-shape seems unlikely. So there's a debate between a U and an L. And if you sort of draw a U and an L on a piece of paper, depending how far you push your pen on the right-hand side, you start with an L and then you get to a U. So somewhere in that U and L shape zone. But what we know is that the longer the lockdown, the more exponential the long-lasting damage to the economy is going to be. So, you see lots of really smart people talking about these things, but quite a neat way of thinking about this is almost to do one of those, a graph with a y-axis as an x-axis and 4 boxes on the graph. So one of those 2x2s. And if the x-axis is, the effectiveness of economic policy, and the y-axis is the effectiveness of the health response, if you go up to the top right-hand corner, which would be an effective economic policy and an effective health response, then you can get back to more of a V-shape and a healthier economy relatively soon. Certainly not in 2020, but beyond that. But as soon as you start drifting into the bottom left-hand corner with ineffective economic policy and ineffective health, then you're very definitely in the L-shape environment. So, growth in 2020 certainly, extremely negative wherever you look, with some sort of bounce back in 2021. I think, the forecast range in South Africa feels at the moment somewhere between -7 and -11. There's some outliers on some sides of that, but, somewhere in that range. For inflation, in this environment, I think it keeps falling. Again, I could be wrong, but, very little demand. I'm sure some products just aren't being sold. So when you plug those into an inflation model, the price definitely doesn't change if there's no sale, and very little, pricing power. So, our latest economic forecasts, I think, have inflation averaging less than 3% for the full year and probably falling to 2 or just below 2% at some low point during the year. And then from a tax point of view, in an environment globally where you've seen, unprecedented fiscal stimulus, unprecedented fiscal deficits, and extremely high levels of debt to GDP, I would imagine that in that environment over time, taxes either directly or indirectly are likely to increase over time rather than decrease. Obviously, with the fine balance of knowing when that increase is actually going to be counterproductive in terms of the overall generation of tax revenue.
Great. And if we just then look at one of the things that I've noticed with COVID is it seems to have accelerated some trends that businesses have been talking about for some time, and that could be doing business digitally, having an event like this, things like remote working. From your perspective, which of these trends that have you identified which you think are the most critical and game-changing, and we sort of not going back to pre-COVID days?
Yes, I think, certainly I'm certain the trend around the importance of sustainability and purpose for any business, I think, is going to continue to accelerate, both from a client and society point of view and an investor point of view. And I think a crisis like this will put even more emphasis on that. I think you spot on. The obvious one is the acceleration around digital and building more agile organizations. I'm sure I look at Nedbank and what we've been able to achieve in the last 4 or 5 weeks in terms of completely reshaping our organization to operate in the new world. If we tried to do that under business as usual, it would have probably taken us a year before we'd been able to get all of that stuff done, certainly 6 months. But we've been able to do it in a couple of weeks. So I think there are a lot of lessons around agility and speed of execution. So I think digital will continue to escalate as a key agenda item. And off the back of digital is always the focus on customer experience, costs, and data. And the importance of data. And then I think finally, just from me, I'm sure while remote working will certainly increase, I don't know if I'm like many of you out there, personally, I can't wait to get back into the office. I've had to go in for a couple of days for things that I couldn't do remotely. but I'm desperately looking forward to being able to go back into the office, see people, and interact with teams.
Mike, thank you for that. We've got a number of people on the call who run their own business or advise various business owners and entrepreneurs. And just, this is a super difficult environment for entrepreneurs and small business owners. What is some of your advice to them in this environment?
Yeah, I think most of my advice would be pretty obvious, and I'm sure things that they all really focused on. But this is an environment to focus on cash, to cut all discretionary or excess expenditure, and then to stay extremely close to customers from a communication point of view, to staff, and to bankers and potential financiers. And here, certainly, I think, SMEs need to make sure that they really do understand all the available schemes to possibly help SMEs through this environment, be those payment holidays from their bankers, and we've spoken a little bit about that, be those some of the release schemes for their staff. Anybody who was an early subscriber to the South Africa Future Trust or the Oppenheimer environment would have been benefited from that. I know there was through I think business partners, the Rupert donation is also fully dispersed. And then right now, as of yesterday, the release of the SME scheme, I know certainly Nedbank is communicating with all of our customers who we think could be eligible. But I think just make sure that you understand all of these potential cash flow benefits that you could derive, and use them wherever possible to try and ensure that you can tick along and stay alive until business gets back to a more normalized environment.
And then again, and maybe it comes back a bit to one of your first points, but again, there are many people here who are leaders in their business or managing teams, and your advice to leaders trying to manage in such uncertain circumstances. And particularly I'm interested in what you do personally to manage the stress of such a time.
Yeah, so I think that the basics of leadership are always around, communication. And in this environment, it's communication. So, significantly increased communication, absolute understanding of what should be delegated, because this isn't an environment where individuals can do everything. You have to delegate and be able to operate and trust teams. Continue to provide motivation and support. I think those are all absolutely vital. And to remember that your job is effectively to lead the team, to ensure that the team can perform better than the sum of the individuals. In terms of stress, I'm not sure I'm particularly good at all of those things, but I can tell you what I try. I think it's important to try and get into some sort of routine. I didn't do that for the first week or so, and then I got into a much better routine around working from home. It's very, very easy just to slip into 14 hours a day working from home, and you work on weekends, and that's not going to be good for you long term. So you've got to try and get into some sort of routine and discipline. Try and fit in some form of exercise, and I found it's great early in the mornings, and because we can only do this from 6 until 9, from 6 until 7 feels like about the only time you can get it done. Sorry if you guys in Cape Town if it's a bit dark there, but maybe under level 3 they'll fix that. But try and get in some exercise just to clear your mind and stay healthy. And then, also reflect on some of the privileges that we have. So life might be difficult and tough, and working from home and dealing with really difficult issues, etc. But, many of us remarkably privileged in the jobs and roles that we have. There are many people who it's significantly more difficult for than ourselves. And there are also some benefits. I'm sure we've all got some kids at home who might otherwise be studying or at universities or at boarding schools and things. So, try and, use this for some really quality bonding time. As our kids were telling us the other day, I'm sure one day when they have children, they're going to come and ask their grandparents, what was it like when you survived COVID?
Great, thanks. Mike, I think we out of time, but many thanks for your time and insights. Thank you to all who have joined us this morning. A reminder that this session has been recorded and will be available on our podcast channel on Apple, Spotify, and Google. Also, a reminder that tomorrow we have our 1-hour speed virtual treasurers conference with speakers including Mike, JP Landman, Nikki Weimer, and fund managers from BlackRock and Taquanta. And on Friday, we interview David Levison, our responsible investing specialist, who will share his results on the first responsible investing survey of the South African asset management industry. Once again, thank you very much for joining us and have a good day.